Good afternoon. Thanks for tuning in. You're watching Countdown on Bloomberg Quint Live, India's first digital live streaming business news service. These are the top headlines that we're tracking at this hour. It's a sixth straight day of losses for the benchmark indices. The Nifty trades below the 10,200 mark. FMCG and IT are the only sectors to trade with marginal gains. The PSU Banking Index is the worst performing index, falling to its lowest level since August 2016. Axis Bank falls more than 1% after the lender says it has an exposure of 200 crore to Nirav Modi and Mehul Choksi's firm. ICICI Bank is one of the top Nifty losers despite claiming to have no exposure to the PNB fraud. And Bharti Airtel is the top loser in the Nifty after falling for the fifth straight day. The stock is down close to 10% in the interim.
Well, yes, it's an afternoon that probably belongs to the losers, but the intraday chart will show you that we are off the lows of the day. Look up the Sensex as well. The Nifty is about 0.44%. The Sensex will come up on your screen. And from the lows, let's get the Sensex up. From the lows that we were around here, we now just about 1/3% down. It's not really turned out to be a very tough last 45 minutes of trade, but let's wait and watch. There could be more between now and when the trade closes as well. The heat map, and then I just want to mark the global markets as well once before I hand it over to Navneet, shows you that there's some bit of recovery. Select IT names, and by the way, the ones which were up and active in the morning have pulled back. So HCL Tech is now the top gainer. The others, not so much. In fact, Wipro, Tech Mahindra, and Infosys marginally in the green. So what lost out the last few days is making a bit of a comeback. Otherwise, the others were at the forefront at the start of the trading day. Z Entertainment, there is, well, a very bullish note by Kotak too, but that notwithstanding, some news flow surrounding that, up about 1.5%. ITC about 1.5%. Kotak Bank about 1%. But that's the limited set of gainers that we have. The losers list, very well known. Bharti down 3.5%, but SBI, ICICI Bank to an extent, a couple of other banks like Axis, I saw it somewhere right here. Axis Bank is about 1.25%. So these 2 or 3 names have led the downfall in the session today. Just a quick check on what the global markets are doing before I hand it over to Navneet as well. And the European indices will come up on your screen. A mild bit of red, not too much. They were much more severe when the futures were being looked at about noon. But right now about, well, 1/3% for the FTSE CAC, and the DAX marginally lower in trade. So no alarm bells out there, but yeah, keeping the market mood under check for sure. But if this is what the world picture and the large cap picture is looking like, the mid cap and the liquid names present an equally interesting scenario. The market breadth too, not too good, Navneet.
That's right, Neeraj. The market breadth has been deteriorating in the last few sessions, and selling pressure for this market actually continues. As we mentioned, we're down for the sixth straight day today. Even if you look at the futures and options market, remember yesterday there were fresh short positions that were seen for both Nifty as well as the Bank Nifty futures. For Bank Nifty, there has been an additional open interest addition, which is telling you that there are fresh shorts which have been taken in today's trading session. The Bank Nifty futures should come up on your screen in a while, but I guess the Nifty futures, last when I saw, they were trading at a premium, so some bit of respite there for the Nifty futures as well. Remember, until yesterday we were seeing the Nifty futures trading at a discount, so turning into a premium is a positive sign. 14 points, which is telling you probably at these lower levels there could be some traders who are willing to go ahead and create fresh longs. Premium now is nearly 16 points. In terms of options data, the base for this market has been moving lower, because if you look at the OI concentration, that's moved to 10,000 put and the 10,500 call strike. So that's giving you a range of nearly 500 points. But lower level strikes have actually started to become active. So today there has been aggressive riding on the call side for 10,200 and the 10,300 strike. Both of them so far have added over 10 lakh shares. Whereas on the put side, addition has been seen for the 10,100, and maximum addition so far has been around the 10,200, which has added nearly 8 lakh shares. So the bulls and the bears will fight now for the 10,200 mark, where Nifty is currently trading thereabouts. What levels to watch out for on Nifty? Definitely watch out on the downside for the 200-day moving average, which is somewhere about 10,130. For Bank Nifty, I'm sure the traders will be watching out for the 24,000 mark on the downside. In terms of stock futures, well, the banks are once again under pressure, but today is the day for a private banking stock. Karnataka Bank touched its fresh 52-week low. In fact, the stock's touched, it's fallen on very high volumes on the cash side. Heavy amount of shorting has been seen for this stock. If you pull up the futures, that's going to tell you OI build-up of nearly 10%. But even on the option side, there's a lot of trading which has taken place for this one. Canfin Homes, there's no major shorting seen on the futures side, but the stock has fallen 6%, and the volumes on the cash side has been quite on the higher side. So watch out for this one. And lastly, Adani Enterprises, after falling 10% yesterday, it's down another 6%, and we've seen huge amount of shorting coming in for Adani Enterprises. I think more of the positioning, Neeraj, has been on the options of Adani Enterprises today.
Yeah, it's looking slightly wobbly, a clutch of these names. The entire Adani Group stocks are looking slightly precariously placed. But let's talk about this market mood and what do portfolio managers do in a scenario like this. Rajesh Kothari, Managing Director at AlfAccurate Advisors, joins us right now on the show. Rajesh, good having you as always. Thanks so much for taking the time out. It's been a while, so pleasure having you. I'm guessing the flow of money from investors would not be stopping, Rajesh, but just the fact that almost everybody that we speak to currently believes that there will be better opportunities to deploy this money at some point of time later on in the year. What is a portfolio manager like you doing in these times?
Well, I strongly believe that timing the market is more important than timing the market. One thing is very clear, that there is a strong earnings growth recovery over next probably couple of quarters. The recovery in earnings growth has already started from second quarter financial year, that is basically June onwards, June to September 2017. For the first time, Nifty has reported double-digit earnings growth. In third quarter, that earnings growth momentum continued. And not only that earnings growth is improving, but also it is becoming much more broad-based. So there are many sectors which are participated in that higher earnings growth. So on one hand, there is a very strong earnings growth recovery. On the other hand, there are some macro issues, and those macro issues kind of what I would say, they are like cause of concerns, whether it is a bond yield, in US bond yield, India bond yield, whether it is a rising inflation levels to some extent, and so on and so forth. So I think we need to have a fine balance between the two, and we remain quite positive on the Indian market with a 2 to 3 years time frame, and we believe that every decline to be used as an opportunity. Yes, there can be more correction, maybe another 5-7% correction is possible, but it is very, very difficult to time the stocks. So we keep doing the what I would say shopping whichever companies which we believe we are comfortable at current valuations.
Invested, Rajesh, currently? I mean, I'm guessing the flow of money would, if at all, have just slowed a little bit but not stopped. Every penny that's come in the last 1 month, are you fully invested?
No, not yet. So basically, investor would have come in last 1 month. Probably we are holding about, we have invested about 30% and 70% we are holding on cash. And, that is during last 30 days, whosoever would have come. But gradually we are increasing the investor levels as, market keeps giving us more and more opportunities.
Hi Rajesh, good afternoon. Well, sitting on 70% cash is definitely on the higher side, and you've also mentioned that you remain bullish in the Indian markets from the next 2 to 3 years time horizon. Then are you looking to deploy that 70% cash at these levels? If yes, if you could share with us which sectors or stocks?
Well, we are more what I would say stock specific, and rather than Nifty levels. There are many companies which are probably lifetime highs, whereas probably they would have outperformed Nifty by 15% on compounding terms, and there are many companies which are still trading at lifetime low despite Nifty going to a lifetime high. So Nifty levels are not much important for us. They are just like a I would say broad indicator. Having said that, the sectors and the companies, by and large, the sectors remains the same, which we have discussed last time. And in fact, those are the sectors they already outperform, not only in the rising market, but also in the current correction phase of the market. So, for example, auto ancillary is one theme where we are very bullish. Private sector banking, particularly the retail side of the consumer banking side of private sector banking, we are fairly positive. NBFC is one space which is looking again interesting because we believe that some competitive pressure will ease because of some issues at the PSU banking side. Chemical, particularly specialty chemical, is a one segment which we like, and we continue to remain positive on that theme. The consumer side of economy, which is including not only what I would say FMCG, but also consumer durables, tiles, plywood, and such stories. We continue to like. Staffing as a one business, which we discussed at length some time back. We continue to remain positive on that theme. So these are the select pockets where basically earnings growth is very strong. So to give you a perspective, for example, in third quarter FY18, while Nifty excluding oil and excluding PSU banking has reported 11% net profit growth, our portfolio companies on a combined weighted average basis has reported 22% plus net profit growth. So basically it is very, very important that what kind of companies you are selecting, what kind of earnings growth we expect those companies to deliver over next 2 to 3 years, and of course what valuations you are paying to buy that earnings growth. It is that combination which will decide your returns over next 2 to 3 years.
Rajesh, correct me if I'm wrong. I think you've been constructive on IT in the recent past, and we've seen the IT sector outperforming the markets and the other sectors. Nifty IT this year is up nearly 9 to 10%. Do you think there is more steam left here?
Well, I think the entire sector is going through very interesting trends. While on one hand, what I would say big daddies of IT sector, they are still struggling to report very strong revenue as well as earnings growth. The mid-tier companies have started doing well, particularly in the earnings growth. Maybe because it is easy for them to change the revenue mix, the business mix compared to the large, big daddies of the world. But we strongly believe that the models are still emerging in IT sector. The challenges still remains. And it is very, very important in a sector like IT, where you need to be globally competitive, and the pricing side, the margin side is very, very important thing. So we are still a little bit, cautious on the sector. We are holding 1 or 2 companies, but otherwise we are not that gung-ho on the sector as on now.
Rajesh, have you guys invested in the liquor space?
No, we do not invest in liquor space.
Acha, you do not invest in liquor space. No problem. I heard you mention consumer durables as well. Now, it's a pocket, while may have had a mixed Q3, but a clutch of companies and majority of the companies, let me put it that way, at least the ones that I looked at, reported a fairly decent quarter in terms of sales growth. You could argue that maybe the base of demonetization quarter also helped, and the margin performance wasn't bad either. What here on? Because if the focus is rural, then you would arguably have a case of consumer durables and select two-wheeler companies finding a lot of favor in calendar year 18. Is that a reasonable estimate? And if so, are companies available at valuations from where investors can make money over a 2-year period?
Well, very interesting question. See, basically, one is of course the better demand growth environment. Not only rural but also urban. So urban is anyway doing well. Rural has started improving from third quarter onwards. If you look at most conference call transcripts, if you hear the most management call commentary across the sectors, whether it is a Hindustan Levers or Britannia's or car companies or two-wheeler companies or durable companies, they are talking about a better demand environment, particularly on the rural side. Urban anyway is doing fairly well. So one is that. Second is, of course, the penetration levels, they remain very low, and that is another big opportunity. But more importantly, the competitiveness of the companies, they are basically, the companies in at least in which we have invested, they are improving their product profile, they are improving the, what I would say, more technology-backed products. And the players who were very aggressive 3 years back, they are no more that aggressive in pricing terms. So the pricing pressure in few segments of consumer durables, they have little bit, I would say, reduced. Of course, it remains very competitive. Cutthroat competition is always there in any consumer segment. But now that cutthroat is not, cutting. It is not about undercutting. It is not about giving more and more discounts and, giving more and more sell and, what I would say, kind of a special discount schemes. So those have reduced to some extent, over last, couple of quarters. So combination of all these things, we strongly believe that companies are well placed to probably deliver very strong double-digit, earnings growth, 18-20% kind of earnings growth is a fair assumptions over next 2 to 3 years.
Rajesh, any view or any exposure in the road construction space? We've seen orders being awarded to companies like Ashoka, Dilip and Sadbhav Infra in the recent past.
Yeah, we strongly believe that there is going to be a lot of activity in this construction space, particularly because of the NHAI and Ministry of Road Transportation. A lot of order announcements are going to happen, and that will definitely help the construction companies which you already named. But we are not too sure in terms of the valuation. We believe that it is fairly priced in. Most of the earnings growth is priced in. Do remember there are cycles in these sectors, and cash flow is more important rather than just earnings growth. We have seen what happens when increased activity, particularly in the order book side, that leads to invite what I would say more competitors into the space, and ultimately your cash flow suffers at some point of time. So you need to have a fine balance between earnings growth and cash flow and valuations. Currently the valuations we believe are not in our favor in construction companies. I think probably we are better off holding the capital goods companies which have a very, very strong business moat, has a lesser, I would say, volatility from the earnings growth perspective, has a stronger return on net worth and a stronger free cash flow conversion metrics compared to most of these construction companies, and are still trading at a reasonable valuations versus construction companies. And therefore, we are holding more of capital goods companies versus construction companies.
You were invested in KNR, if I'm not wrong, but irrespective of the name, if you were invested, have you reduced exposure or are you just not taking fresh exposure?
No, we have exited, that company from our portfolio primarily because of the valuations is the reason. It's a fantastic company, probably one of the few companies in the construction space which is a very, very strong return on net worth, return on capital employed, very strong credit rating, very low leverage. But the valuations have already, has gone up through the roof. So we decided, to move on and to identify other companies in the other sectors.
Okay. Well, we'll be speaking to their management in a bit as well. But Rajesh Kothari, many thanks for joining us today and giving us your thoughts. Interesting to note that he mentioned that they're sitting on the new money that has come in the last 1 month. They're sitting on 70% of cash waiting for deploying, but will now slowly start deploying money as valuations start turning a bit more favorable. Speaking of construction companies, though, Sadbhav Infra has won an order for a highway project in Karnataka. The total order is worth about 934 crores. Let's discuss this in further detail with the ED, Nitin Patel, who joins us right now on the show. Mr. Patel, thanks for joining in. I would guess the details of the order remain the routine. The IRRs would be in line with what you earlier enjoyed. And what's the execution timeline for the same order?
Actually, what we have seen that during the last 15 to 20 days, because bidding intensity has become so strong, and almost there are 2 to 3 bids on an average every day, actually. So what we have seen that the large pool of companies, even those who are bidding in hybrid annuity, we are seeing that all are not bidding in almost all the projects, actually, which was the case in earlier. So this is the really good time. And what we understand that the project what we won will fetch at least additional 2% additional IRR as compared to the what projects we won earlier, actually. And that is the main reason that the competitive intensity has gone down substantially below, actually. And the construction time for completing this particular project is 2.5 years. And concession period then after construction is 15 years for making the payment by NHAI in the hybrid annuity mode.
Nitin, what would be the margins just roughly from this order?
See, we expect that at least two ways. On a construction business, you will be able to make at least a minimum 12 to 14% EBITDA on the construction business at Sadbhav engineering level. And the money which Sadbhav Infrastructure is going to invest, the net investment is going to fetch at least 17 to 18% minimum IRR of the investment.
And any more orders that you've bid for?
Yes, actually, as we have mentioned also on the various occasions, that this is the month particularly, and particularly this quarter 4 is the bidding quarter, and we have seen that the particular this whole month there will be at least we are going to submit another 40 bids before the March 31st. So we expect that another at least 2 to 3 more order wins basically may come, considering the competitive intensity what is there in the market now.
Wow, so you're suggesting you've bid for 40 more orders?
We have the bids what we have submitted as of now, almost around 10 to 11 bids have already been submitted, for which the results are yet to be opened. Another 40 more bids to be submitted before 31st of March this month.
Okay, and this takes your order book to what level, Nitin, and what's the guidance that you can give us for FY19?
If we consider this particular order, now we have crossed the total order book of 13,000 crore in the construction business at Sadbhav Engineering level. And in Sadbhav Infra, the operation and maintenance order book basically will now reach to almost around 750 to 800 crores. So what we are of the view, our guidance for the FY18 was 7,000 crores. Now we have already surpassed. So we are already back the 9,000 crores worth of the order in FY18 itself. And we basically thought that the FY19 will be able to get almost around another 7,000 to 8,000 crores of the new business, considering the huge bidding pipeline in highway sector.
So, sorry, am I correct? 9,000 crores of new order inflow in FY18 and total order book as of now for Sadbhav Engineering, 13,000 crores.
Yes, correct.
Okay, great. We wish you all the best for executing the same. Thank you so much, Mr. Patel, for joining in today and giving us that perspective. Well, that's interesting. Fresh order inflow of about 9,000 crores as well. This is pretty strong. And we've seen that happen for a clutch of other companies too. Dilip Buildcon being one of the principal ones, but the others haven't been too far behind. In fact, let's get in one more road construction company before we talk about this space. KNR Construction recently won orders as well. I think the last order that they won is about 1,020 crores from NHAI. Let's talk about the prospects for the company going ahead with K. Jalandhar Reddy. He's the ED at KNR Construction. Good having you, Mr. Reddy. Thanks for joining in. Interesting orders coming in for the space at large in the last few months. There is a Macquarie JV which won a toll operate transfer order as well. A clutch of other companies have won very large orders, some of this northwards of 4,000, 5,000 crores. How is the new order inflow looking like for you currently?
Well, the Indian government has started with the Bharatmala projects, and it's a huge, big project. During the month of January, February, and this March, we've been having several tenders which are coming in, and we are also selectively trying to bid on HAM projects as well, EPC projects also. So I think the order inflow concern for the industry itself, it is very big, and everybody is going to get enough order in hand, and the industry is going to grow very nice this time.
Well, an expert was saying yesterday that the order inflow in FY19 will be much, much better than FY18. Is that true?
Actually, in fact, the Bharatmala is a very big program with 5 lakh crore and odd big project, which is the first year they are only targeting to call about 90,000 crores and odd, what I have been heard. And during the next year concerned, the targets are very big. So definitely, as you heard, it is a fact.
But you've traditionally been a very conservative approached company, one of the most conservative probably as per the analysts. Now the question is that if indeed the outlook is looking so good, would you see your nature changing, and would you therefore win more orders?
Yes, actually we have been earlier only focusing on EPC projects, However, as you said, the order what we have is about 3,300 crores by December quarter ended. And I think looking forward, we are also focusing about 3,500 crores worth of new HAM projects. So that we are able to even bid in many areas like in Kerala, as well in difficult areas in northeastern part of areas. So we are very confident without diluting our policies and without diluting much margins in. We would like to get the orders, and we have already won we have been issued with one LOA for the Trichy to Kalagam, which is about 1,040 crores. So the order inflow is already started. So we are expecting very good order inflow for our company.
Okay, what's the current order backlog, Mr. Reddy?
Currently, the 1,040 plus the 3,300, which is about 4,300 plus.
4,300 crores of order book that Mr. Reddy has already. Okay. Having said that, a couple of other points that I wanted your view on. One is, there's a Motilal Oswal report which says, and I'll look at the numbers, that compared to the 1,800 crores that you got in terms of sales for FY18, you as a company could go to about 2,800 crores by FY20. Is that a reasonable estimate or an optimistic estimate?
Actually, it's at this stage, it's quite difficult to tell you about the figures. But as you are rightly speaking about it, that the growth we are expecting is at least it could reach the levels. If not 28, it could be 25 or 24 also.
Okay, we wish you all the best for that and more, Mr. Reddy. Thanks so much for taking the time out and being with us today. That's KNR Construction with his thoughts on the markets and rather on their markets and the victories that they will have in the order inflow situation. By the way, as we speak, the markets have come off again a little bit, now down about 6%, so 200 points back on the Sensex and about 0.7% on the Nifty. So that bout of recovery that we were talking about midway through that start of the show has been sold into as well. The Nifty bank 304 points lower, so that leads the way, but it's not that the others are too far behind, because while today banks have, yes, taken the lead in the fall, there are a clutch of other names which are looking fairly wobbly. Adani Ports now is down 4%. ONGC is down about 3%. Mahindra & Mahindra continues to grind lower. That's about 704, down about 2%. And HPCL has lost about a couple of percentage points as well. So that slight bit of strength that we were starting to see has been hit very, very badly. Not too many gainers, I'm afraid. That's probably the key reason. ITC, one of the key heavyweights, which is doing okay, but otherwise, a clutch of names not doing all that well. The Adani Group right up there in terms of the losers.
Because the IT pack is pretty much holding about. If you look at NIT Tech, let's just pull up the intraday chart of that. That's now sitting with gains of nearly 3 to 3.5%. It's almost at day's high. There is some amount of long build-up which has been, seen for NIT Tech. In fact, if you look at the top 4 or top 5 gainers among the F&O securities, you've got NIT Tech. Hexaware has been sitting with good amount of gains since the morning session, and now Oracle Financial, that's OFS's, that too has gone up by almost 2% as we speak, and HCL Technologies, all these stocks have seen good gains, and clearly IT is the one which has been bucking the trend, and we've seen that outperformance coming from this space if you look at on YTD basis, as well as Nifty and Sensex may have turned red for the year, but the Nifty IT is still up 9%.
Holding up for sure. Yeah, that's well put. Actually, look at the IT names, and I think those are doing very well. Some stocks, just before we get in our technical experts, some stocks that have just come off in the last few minutes of trade. ITD Cementation, I think, stands right up there. It's just come off quite rapidly from the levels that it was trading at. So about 5% lower, but 3% cut in the last few minutes of trade. Advanced Enzymes is the other one which has lost a bit of ground. So that one has certainly come off in trade. 8% down now for Advanced Enzymes. KRBL is the other one which has corrected, and Gateway District Parks has come off as well. No particular pattern really to the list of losers, but for the fact that some of the stocks which were a part of the Adani group or the JP group, maybe even ADAG, are the ones which are correcting thick and fast. By the way, NIT Tech is back in the green, up about 3%. We are talking about IT. This one is amongst the best performing stocks and doing well. And what's not done well is Bhushan Steel. Well, amidst all this talk of resolution, somehow that delay and the to and fro about who would eventually win Bhushan Steel and maybe at what price, really resulting in some more downtick there. 5 million shares traded on Bhushan Steel, 8% off. Deepak Shenoy, I'm told, founder and chief executive officer at Capitalmind, joins us right now on the show. Always a pleasure having him, more so today. Deepak, thanks so much for taking the time out. I'll get to the market behavior in a bit, Deepak, but since I was just mentioning about Bhushan Steel, I've seen you tweet enough and more about why some of the errant promoters should not be given a chance to come back into the saddle of these companies. And somehow, even after going through a set of processes, we still don't have one clear suitor for any of the assets, save for maybe one small one, but otherwise we don't really have clear suitors. That seems to be unnerving minority investors who, for whatever reasons, are still invested in these stocks.
Good afternoon, Neeraj. I find it a little, I'm perplexed because I feel like these stocks should not be worth, even half of what they're trading at, because we did an analysis of a potential bid on Monetis Path, where we found that, even the best case valuation was 3 or 4 years from now would still be a 30% haircut for current shareholders from the current levels. If I looked at Bhushan Steel, we don't know the contours of the bid of Tata Steel. They say it's 35,000 crores. Now, if you consider the current shareholders, I think they will own a small, minuscule fraction of whatever is eventually the equity of Bhushan Steel. If it continues to be listed, I believe the price will probably fall to less than half of what it is right now, because the company owes so much that lenders and the new buyer will literally own 99.5% of the equity. So, while the companies could be revived, I don't think you will make any money being a current shareholders of this company. So, or any of these companies, Amtech Auto, Bhushan Steel, Monetis Path. Only company that's getting anything was Binani Cement. It's not a listed company. It's a subsidiary of a listed company, and in Binani there is no haircut, so things are good there. But everywhere else we're seeing 75-80% haircuts. Therefore, nothing left on the table for current shareholders.
Hi Deepak, Navneet here. Since lenders will be taking haircut, and now that's pretty much sure the kind of bids that have been submitted for majority of these assets, do you think the whole exercise then which has taken place, will the lenders benefit out of it?
There is some benefit, Navneet. Fact is, if you're hurting, there is a point at which when you know that the pain is over and that's the maximum amount of pain you have, it provides some relief, saying that at least it won't get any worse from here. So that is the point of relief. The point is, if you have a 35,000 crore or 50,000 crore outstanding loan to Bhushan Steel, you have provision because of RBI requirements about 50% of it, so 25,000 crores. If your hit is any greater than that, then you have to pay out more. So in Monetis Path's case, I think it's a 10,000 crore loan outstanding. They will probably be getting only about 2,500 or 2,600 crores out of it. So it's a 74% haircut. So they would have provisioned 5,000. They'll take another 2,400 crores as a hit. That's again a one-time hit and no further pain from Monet. So in that context, what will happen is it just defines the further pain that they will have to take. It's not necessarily beneficial, because after taking that kind of pain, will the banks have to recapitalize themselves again? That is a question we don't have an answer to yet.
Okay, Deepak, just one question on the markets too, and then we'll get in our technical experts too as well. But now you, aside of the advisory that you anyways run on Twitter or otherwise, you now also manage portfolio money. Are you putting that or deploying that money to work, or are you standing by a bit and waiting for, maybe more, maybe better levels. I know people like to say that timing the market is not fun, but hey, if the going is the way it is, why not wait for better levels?
No, I have been saying this, I think, from post-budget, that till March 31st, at least, things are looking sorted. So we've been buying a small amount every single day since then. Basically averaging out over the last 1.5 months. We know there's more pain to come, but there's some of our stocks which will hit lows much before the market will hit lows. So it's useful for us to continue to buy on a regular basis rather than continue to just wait and wait, because you will never be able to catch the bottom. At least I've never been able to catch a bottom. I find it easier to just do a systematic purchase of certain stocks which I like at prices which I like them for. So having said that, I feel that the market will see a lot more damage. This credit lending crisis is going to involve more and more of these NPA type situations, some of them big, some of them small. So I'm hoping that some of the good stocks also fall enough to be able for us to be able to pick up more at lower levels. However, we are seeing that most of the stocks that are fundamentally good seem to not be crashing too much. So, we're waiting. I think there's going to be more to come. It's better to, timing is always a good thing, but, I feel buying a little every day is probably a safer strategy.
By the way, so just before we move ahead and we get our technical experts in, I think there are some flashes on the screen which I didn't manage to address. But the Australian Prime Minister Turnbull has backed Adani's mine project in Queensland. They're saying that the $16.5 billion mine in Queensland has gone through extensive planning, permitting, and therefore should go ahead. I don't know if it really makes too much of a material difference to the Adani Group stocks today or no. But that's maybe some shot in the arm that the group, by and large, was looking to get. The stocks, of course, under a bit of pressure, nevertheless, today. But should we get our technical experts on board? Let's try and get them and try and talk about how they're approaching trade this afternoon. Deepak, stay on. So much more to talk about. But Ruchit Jain, technical analyst at Angel Broking, joins us on the show, as does Hadrien Mendonca from IIFL. Gentlemen, both of you, good afternoon. Thanks so much for joining in. Hadrien, I remember a conversation, I think yesterday or day before yesterday, wherein you were talking about the possibilities of downsides existing. We're now at about 10,176, very close to the 200-day moving averages. Whether or not they make a difference to you is another story. The question, though, is that after this kind of fall that we've seen already, 6 days of continuous fall, is there an option to initiate fresh trades on either the Nifty or the Nifty Bank? What levels are you watching for?
Yeah, as you mentioned, if we leave the equation of the 200-day moving average support of 10,100, I think the clean chart is actually telling us that we are heading lower. But one cannot ignore the 200-day moving average, and I think we'll see some kind of settling around those 10,100 levels. I think the pace of the fall that we've seen till now, both in Nifty, Bank Nifty, might reduce, and there are expectations that, we may see a little bit of consolidation around these levels before we see that, another round of fresh selling pressure or fresh breakdown, if I may say, in the markets. See, clearly, if you map the markets since lows of 2016 December, I think this is the first time Nifty has given a confirmation that it is entering into a lower top, lower bottom cycle. Now, if you remember, till now we've only spoken about higher top, higher bottom structure for the Nifty or even the Bank Nifty, but this is the first time there is some sort of confirmation coming on the daily charts. If you see the larger picture, monthly chart, we are seeing a bearish engulfing pattern, seeing a lot of follow-up, selling pressure coming in, which is also giving another, indication that weakness is still here to stay. So, even on the weekly charts and the daily charts, one more thing that I like to mention is the head and shoulder breakdown that we have seen, and also it is confirming as it is closing below the same. I think all these parameters are actually indicating that we may see further downside, but given the 10,100 long-term 200 DMA that we have not broken for a long time, I think that should be a key level where we could see a little bit of consolidation or sideways move before the next leg of downside begins.
Okay, so 10,100 is a key level to be watched out in Nifty on the downside. Ruchit, what about you? Are you taking any fresh positions at current levels?
Hi, very good afternoon. Certainly, the trend for the markets seems to be on the negative side, because we have seen a consolidation phase of about 3 weeks. And when we were in the consolidation phase, the consensus was that the next directional move will come in post the breakout. So the breakout was not on the higher side of 10,640, which was the earlier resistance, but the lower end, which was the support of 10,300, 330 range. Even during the expiry week in last series, we had seen that 10,300 to 330 had acted as a very strong support. So that lower end has been breached. So this is an indication that of continuation of the corrective move that we have been witnessing since 11,200. Now 10,300 to 330, which was the earlier support, would now turn into resistance on any kind of bounce back move. So certainly because of that 200 DMA, if you witness any kind of pullback move, maybe around 10,250, 300 range, that should be used as a shorting opportunity, keeping stop loss about 10,330. We should see a breakdown of this 200 DMA very soon. We have already seen a consolidation phase, so we are not expecting a major consolidation phase again in near term. I think any pullback moves towards 10,250 to 300 range, one should use that as a shorting opportunity.
Okay, so let's get individual trading ideas also going for the stocks. Ruchit, I'll come back to you. What are the top trading strategies?
We have a sell recommendation on Container Corp. If we see the daily chart, then the stock has breached its support of 200 DMA with very high volumes in yesterday's session. So this indicates a continuation of the corrective trend. One can go short at current levels. The risk reward ratio is quite favorable, keeping a stop loss about 1279 and expect targets around 1195. We also have sell recommendation in CG Power. The stock has given a breakdown below its head and shoulders neckline in today's trading session, and on weekly chart it is indicating a probable target of around 70 in short term. So one can go short in CG Power, keeping stop loss above 80.5 for target around 70. And a contra buy recommendation in Persistent System, which I have been recommending since last I think 1.5 months now. The stock now has been forming a bullish flag pattern, which is a bullish continuation pattern. Some of the mid-cap IT names, even in today's trading session, we have been witnessing outperformance. So we believe that if one has to take a contra call, Persistent System, one can go along even at current levels, keeping stop loss below 795, expecting target somewhere around 900.
Okay, Hadrien, what about you? I guess you have 2 sell calls for the day.
Yeah, both my calls are sell. So first one is idea. The stock is actually, after consolidating for 3 to 4 weeks, finally broken down from this inverse flag pattern, on the daily as well as the weekly chart. So I think the projected target is way more than what we have just given. It's a conservative target of 73. One can keep a stop loss of 81 on idea March futures. Whereas the second call is Dr. Reddy's. The pharma stocks continue to, reel under pressure. Even the strongest, of them, Biocon, has started seeing some cracks happening at the top. So I think Dr. Reddy's continues to stay weak, and one can initiate shorts on Dr. Reddy's March futures, keeping a target of 2104 and keep a stop loss at 2172.
All right, so those are the top trading strategies from our technical experts, but we've got stocks like Fortis Healthcare that's corrected almost 7% as we speak, and Canfin Homes, we did highlight at the start of the show. That time it was down nearly 5%, but as we speak now, the stock is at day's low with cuts of nearly 7%. Even stocks like Reliance Capital, JP Associates, Andhra Bank have seen sharper cuts in today's session. Deepak, how are you approaching the PSU banking space, which has actually dented the sentiment in the recent past? We had good GDP numbers also coming by, but clearly markets shrugged off those numbers because of the PNB fraud case. We've seen a lot of correction, not only in PSU, a couple of the private banking stocks have also come under pressure.
Absolutely, and I think the issue really is that people don't know how many more, for the lack of a better term, how many more cockroaches there are in this kitchen. So we don't know exactly how much more is going to come out. And, the RBI started a new concept from February 23rd that every Friday, banks have to report, all banks have to report any defaults, even one-day defaults to RBI. As an SMA 0, SMA 1, which is about 50 crores of exposure. So This will obviously now force the banks to kind of get their accounts together. They can't be that many evergreening of loans anymore. And given that RBI is keeping a close watch on this, any systemic issue will start to get identified much earlier. I believe more is going to come. It's not worthwhile to say that there is a lot of value in these banks right now, but I think we've particularly fond of a few, even the public sector bank, in the public sector bank territory, where the lending ratios are not as bad as they used to. I'm not giving names; we're still buying them, but we feel that there may still be opportunity in some of these stocks because they're also getting beaten up substantially compared to the level of NPAs and the fact that they don't seem to have any of the exposure to any of the issues that have happened recently. And looking at their books, they don't seem to have that much corporate exposure anyhow.
Deepak, I want to talk about a pocket, this spirits pocket, liquor companies. Yes, the runway of growth is great. Things were looking all okay. The numbers recently have been good, save for United Spirits. But this two factors, this whole Haryana, I think, was the 5th state, if I'm not wrong, which hiked excise in a meaningful way. There's this Morgan Stanley note today which says that the GST Council meet on March 10th could well have some bearing because of the decision on ENA being exempt from GST or no. Have you done some analysis, some math here? And does the fall in United Spirits from 3,800 or 3,700 to 3,000 and the weakness in some of the others provide an entry opportunity in what is arguably, from a consumption perspective, and a very promising space?
Oh, it is. It's an election year coming up, so obviously there's going to be a lot of consumption. However, I feel that some of these stocks have extremely low returns on equity and returns on capital employed. So if you look at, we're talking at some low single-digit ROEs for United Spirits, even though they are the single largest player in the space. And much of this could be because a lot of this transactions in this space happen in cash. So you have to have extremely trustworthy management to be able to believe that the numbers that they achieve will actually come down to shareholders and not, kind of sit around in ether someplace. That's the only reason why I feel liquor companies have an issue, because if they were cleaner, we would be giving them much, much higher valuations. So while we've analyzed them in the past, right now, I don't have any current analysis to say, which one's better. I'm not buying United Spirits for the lack of, any respect on the earnings or return on equity kind of standpoint. But, things could change, and we'll just wait and see if earnings continue to grow, and we might change our mind.
Okay, fair call. Return on equity for United Spirits as well. Debatable numbers out there. Different brokerages, I think, calculating it differently as well. But I think Deepak's point is well taken. It's very difficult to justify what could happen into these pockets over the course of the next 2 days, next 2 years, election year as well, the next 12 months. Let's see if indeed the consumption of alcohol increases, as Deepak Shenoy said, during this election year. Read between the lines, if you will. Okay, let's get into management. TTK Healthcare, the stock in focus. The company recently announced the merger of TTK Protective with itself. To discuss this in detail, joining us on the phone line is Group Director for Corporate Affairs, K. Shankaran. Good having you, Mr. Shankaran. Thanks so much for taking the time out. What's the result of this move? Why is it that this is being done in the first place?
Yeah, this merger was announced way back in 2012. And actually, it was approved by 90% of the minority shareholders. The reason being that TTK Protective Devices is a condom manufacturing company, and it owns the brand Score, whereas TTK Healthcare has been only distributing the brand Score. So, and TTK PDL is 100%, 99% owned by the promoters. So, we not remove any conflict of interest, transfer pricing, all those issues. And to have the synergy of management, administration, efficiency, so we decided to merge the manufacturing company and the brand owning company with the distribution company. So what we are now getting is world-class quality manufacturing condom company, which has got business of branded condom in stores, And they supply white label to Durex, Kothari and other brands. And they also supply Government of India and other governments in a tender. So we thought this will be a good synergy and will strengthen the business of TTK Healthcare.
Mr. Shankran, was it a 100% subsidiary of TTK Healthcare?
It's 100%?
The company which has been merged, was it a 100% subsidiary of TTK Healthcare, or they were two?
No. It was owned by the promoters.
Okay.
The TTK family owns almost 85% of the company. Balance 14% held by public. It's an unlisted company.
Okay, it was an unlisted company. But with this merger now, will there be any impact seen on the financials? What sort of contribution can we expect from this merged entity, or it will not have any substantial contribution?
Let's just say the way we expect TTK Protective Devices Limited is currently it's about 100 crore turnover, out of which 40% comes out of the branded score. This one, it is only now utilizing part of the capacity. Based on our projections and the leads we have for manufacturing for third-party brands outside India, we believe 100 crores can grow by about 15 to 20% per annum for the foreseeable future, and with about 10 to 12% EBITDA margins. That is our expectation. This adds certainly value to the TTK Healthcare balance sheet, and it comes with certain surplus urban land, both in Chennai, closer to the airport, and somewhere near Virudhunagar. So the current market value of the land is a lot more than 100 crores, and it has also got a cash balance. So it won't hurt anywhere the TTK Healthcare. It will only add profit to the TTK Healthcare portfolio. Okay.
You said TTK Protective Devices, the promoters were the current promoters of TTK Healthcare, and if you've issued 64 lakh shares to the promoters, so those shares have been allotted to the current promoters of TTK Healthcare?
That's correct. The promoter holding in TTK Healthcare goes up from current 66% to about 74%.
Okay, I was coming to that. So the current promoter holding will now be 74%.
Yes.
And will you look to increase by 1% more to reach that threshold of 75%?
Not necessary. We are comfortable with this percentage.
All right, Mr. Shankran, before I let you go, what are the plans for FY19? Any capex plan that you're working with internally?
I think the capex plans are not very high. We were talking about 15 crores or so, not very high. And the company has got substantial surplus cash, free cash, which we can use. So we don't have to borrow anything.
Okay, Mr. Shankran, we'll leave it at that note. Thanks a lot for joining us today and taking us through that merger which has taken place, and some clarity has emerged there, Neeraj. The stock has actually outperformed on YTD basis. It's up. So the new shares have been actually issued to the current promoters, and which has taken the shareholding of the promoters to 74%. I think that's been viewed as a very positive sign by the street. Hence the outperformance in TTK Healthcare in the past few sessions. In fact, just this year, we've seen the shares also going up by nearly 45%. Since the share... Sorry.
No, I'll just... Well, so if you're done, I just wanted to mark a Nifty stock which has cracked 8% underneath, and which is why I look up Adani Ports, and the stock should come up on your screen. There's a sharp, sudden crack that has happened in that stock. It's 8% down now. I don't know if the entire group of stocks is coming off like a pack of cards or no. The other Adani Group stock should also come up on your screen. Yes, cracks thereof. It's an exact mirror image of what was happening in trade yesterday. There's a sudden fall in the Adani Group stocks. I don't know if the ADAG Group stocks are falling in the same fashion or no, but the Adani Transmission is down about 10%. Bring up Reliance Infra, Reliance Power, Reliance Communication, and just see if there is pain there. Yes, actually, so it's similar across both. It's an identical pattern, wherein there is a sharp nudge pull back downwards in the late hour of trade, presumably because the index too has come off. Now 10,155. We are trading officially, I think, at the lowest point of the day. Just getting some chart checks going here. Hadrien, Adani Port, firstly, down 7%. If you want to take a call on the index, then that too, it's down about 90 points as we speak.
Yeah, Adani Ports specifically is actually showing signs of double top kind of a breakdowns scenario, which is indicating that further weaknesses is surely seen here, and wouldn't be surprised if the stock comes back to the 360, 350 levels in the near term. As far as Nifty is concerned, as I said, we are heading towards the 200-day moving average, that is 10,100 for sure. Only then we'll see a little bit of consolidation. But till then, I think the strategy would continue to remain, sell on any kind of rallies that we see.
Ruchit, I was just trying to see what would have led this move down on the index and the Nifty Bank. SBI is still down about 1.5% only. ICICI Bank, but I can tell you for the Nifty, one of the weakest hands the last 5 days has to be Reliance Industries. We haven't spoken about it often, but if you pull up this last 7-day charts of Reliance Industries, there's a fairly sharp gash that has come in. The last 5 days would probably show you about a 7% gash that has happened into the stock price of Reliance Industries. This is over 7 days, but if you look at 5 days, from those highs, I think Reliance Industries has come out about 6 or 7%. That's the 5-day chart for Reliance Industries. That's about a 7% downtick that we've seen already. Ruchit, any thoughts here, Reliance Industries?
If I see a bit of more positional charts for Reliance Industries, then in 2017 mostly this was one of the heavyweight which had took leadership and had also shown significant outperformance within the market up move. Now what has happened, in spite of market continuing its uptrend post October, Reliance Industries had seen more of a consolidation phase. I don't think that the stock had given any returns from its late October highs. So this is probably a consolidation phase which is going on after a significant up move in the first half of 2017. And if I see the daily charts of last few trading sessions, then after a long period of time of this entire uptrend, this is the first time we had seen a formation of a lower top on the daily as well as the weekly chart. So this is an indication that the entire up move in which we had seen during the first half of 2017, post October, the stock is now in a time correction, and this probably should continue going ahead at least until we find any significant bottom for the market. Now as far as levels are concerned, 200 DMA even for Reliance Industry would be the level to watch, which it should test. This is the lower end of this consolidation phase since October, and it is placed somewhere around 850 to 860. So I think we should see another 4 to 5% lower levels from current from where it is trading right now, and 850 to 860 range could be seen in Reliance Industries in next few trading sessions.
Right. Let's just pull up the intraday chart of V-Mart. This stock has suddenly gone up in trade despite of markets being weak. So V-Mart is once again trading with gains of 4 to 5%. And remember, this is the other outperformer of this year, which has gained nearly 28 to 30% on YTD basis. Deepak, do you track V-Mart retail? And if yes, any idea what's the reason behind this outperformance that we've seen in the stock price?
This is V-Mart you're talking about, right?
Yes, V-Mart.
So I don't know. In fact, I was looking at something today, and we were like, okay, we have to do a little more analysis, because in this market, making an all-time high is not a small feat. So I'll reserve my comments until I have actually read through the business.
Okay. Hadrien, on the charts, how is V-Mart retail looking, trading around those levels of 1920?
Yeah, V-Mart, surprisingly is just tearing apart. It's just hitting all-time highs almost every day now. And I think it is better to stick with the momentum rather than try and fight it. So one can continue to hold long positions. Although, I couldn't advise someone to go ahead and buy at all-time high levels, but, wait for any kind of declines before anyone wants to enter in V-Mart.
Okay, and stocks which were up yesterday, like Bombay Dyeing, have corrected today. So Bombay Dyeing is down nearly 9% as we speak. And we've also got stocks like EIH Associated Hotel. Remember, this was the other illiquid counter which was seeing some amount of gains in the last 1 month or so. But as we speak, some profit booking seen for this counter as well. That's trading with cuts of almost 9%. Well, it's time for us to head into a short break on this edition of Countdown. But don't go anywhere. On the other side, Menika Doshi will be in conversation with Brian Araha of ArcelorMittal.
Where there is life, there is hope, there is meaning. But life has its downs as much as its ups. Life is about challenges. Life is about opportunities. Time for joy, time for celebration, and time to introspect. Thankfully, in every one of life's moments, and even beyond life itself, there's LIC. Zindagi ke saath bhi, zindagi ke baad bhi.
Sorry, I'm late. क्या हुआ?
कुछ नहीं यार. Just working on my expansion plan.
Funding का चक्कर.
It is so frustrating. I feel like banging my head against the wall.
No, don't bang your head. Cross the bridge instead.
Bridge?
हाँ, ये देख. ला.
अरे.
This bridge gets you in touch with interested investors. Funding happens, which means more outlets, more customers.
Interesting. And what exactly is this bridge?
A stock exchange created for your kind of company. Just list on it and help your business expand.
Really?
Yeah.
तो फिर लिस्ट कर लूं?
और क्या? शुभ काम में देर किस बात की? चल.
हाँ.
NSE Emerge. साथ हमारा, सफलता आपकी. The SME Growth Platform from India's largest stock exchange.
On 26 November 1949, the Constitution of India was adopted, recognizing liberty, equality, and fraternity as the principles of life, which cannot be separated from each other. The government of Karnataka has imbibed the ethos of the Constitution by developing programs and policies aimed at creating a socially, economically, and politically just society. Karnataka's flagship programs such as Maitri, Annabhagya, and Arivu have created an equal opportunity platform for all, irrespective of their gender, economic, or social status. Karnataka is committed to encourage education through various welfare initiatives, ensuring equal status for women and empowering minorities to uphold every individual's dignity. In the last 4 years, Karnataka has formed 462 new Gram Panchayats, which has taken the principles of democracy to the grassroots levels, and our Progressive Vision 2025 document engages public government participation to build a better state for all. Karnataka's collective vision to endorse fraternity, justice, and equality has transformed into Karnataka's model of development, which is based on the tenets of the Constitution.
White shirts, कितने plain और simple. Fog scent, plain और simple white shirt को बना दे special और fashionable. Fog scent, new fashion wear for men.
Back with countdown right here on Bloomberg Quint. As we speak, Adani Port is now down 8%. SBI 3.5%, iBulls Housing 3.25%, and ICICI Bank, despite the clarification, about 3%. Deepak, Shenoy, we've spoken about banks by and large. Just wanted your view on the Adani Group. If you've looked at the group companies, the businesses are chalk and cheese, yes. But they have this history of inter-promoter or inter-corporate loans as well, and difficult to distinguish what could be under a problem and what isn't, and which is why even the Nifty 50, the most stable name in that group, is being dragged down today. What do you do here if you have investments in any of the 4 group companies?
Well, I think, I haven't seen any fundamental news that should drive them down. I think the Australian news is only positive, but, the company that interests me a lot is Adani Ports because it's a port from the logistics angle. I think there is some potential there. Adani Transmission, there have been some interesting moves there as well, but I think the price has gotten away quite substantially. So has Adani Power. So I feel that a correction is good if you are looking to be a long-term shareholder. However, we are not. We have not purchased any of the 4 Adani Group companies. primarily on valuation. So if the fundamentals remain intact and remain good, then yeah, at lower prices I will still consider them. I think 8% is too less, and it's just a one-day thing. Let's see how they move in the next few days before we take a call.
Okay, Deepak, we'll leave it at that. Thanks so much for taking the time out and joining us and giving us your perspective. Always good having you. That's Deepak Shenoy of Capitalmind, deploying some money day by day. Can't really time the market. That's his call. Well, I guess that's probably everybody's call. As we speak, the Adani Group stocks remain somehow the focal point of my attention because of the quantum of fall and the way they've fallen as well. Sharp cuts into all of those. We already asked our technical experts about what to do with Adani Ports and other group companies as well. By your time, there's no saying that this could be the bottom. However, while we're talking about the stocks which have lost out in trade, let's just get in a quick perspective from Yash on the Fab 4 stocks, arguably stocks which are doing rather well even on a market day like this. Yash, good afternoon.
Good afternoon, Neeraj. So Lumax Auto Technologies had gained close to 4% today and is up almost 1.5% as you can see after the company said that it would be considering the proposal of a stock split at its board meeting later in the month on March 23rd. Team Lease had gained as much as 17% today after RBI approved raising the FPI limit in the company from its existing 24% to 75%. A big bulk deal came up in Harrison Malayalam. Nearly 13 lakh shares changed hands, almost 7% equity in a block deal earlier in the day, and the stock is locked in a 5% upper circuit. And also, FMCG stocks are doing quite well. So we have Britannia, which is up 1.1% or so. Also, Colgate, Palmolive, and ITC being the other names which are gaining in excess of 1%. Back to you.
Thanks a lot, Yash, for bringing those Fab 4 stocks of the day. And as we speak, Nifty is only heading lower for the day. 10,155 is where it's trading, down almost 1%. And for Bank Nifty, remember, we'll be watching out for that mark of about 24,000. But Neeraj has highlighted the Adani Group stocks. The other ones which have been under pressure are the likes of Canara Bank. My producer tells me this is down for the 4th straight day, and in the last 4 sessions itself, Canara Bank has lost nearly about 18% in trade. Well, that's the story for the entire banking space, or rather the PSU banking space. Let's bring in Sharmila Joshi, independent investment advisor, who joins us right here in the studio. Hi Sharmila, good afternoon. Thanks for coming by. What is your reading on the markets? Because there's been a sharp correction in the last few sessions. What should one do at these levels?
Well, in a way it was sort of expected. I think, ever since we've heard of LTCG and then the way things have been overseas, we've sort of seen markets sort of grinding lower. But I think the only worry is that post this whole, last week, I think we heard of this whole import tariff almost a week ago. Import tariff coming about. I think, now the selling has sort of intensified, because even the sectors which were sort of doing well at that point in time, metals, IT, even those have seen some of a sell-off. So I think that this concern is not going away in a hurry because of the uncertainty that this whole move has set off. And at least till this year end, I think we are likely to see some money being taken off the table. So first it was maybe restricted to mid caps because that's where people made most amount of money, but we've now seen it in large caps, banks, you name it, everything is sort of getting sold into. So I do think that we'll have a couple of more bad days before we sort of really stabilize at any level.
Certainly bad days for the banking lot by and large. ICICI Bank, Axis Bank. Now, Axis mentioned that it has. ICICI Bank has clarified it has no exposure to. The markets are not really giving any kind of discount to the corporate-facing banks. Are they approaching prices wherein they are pricing in some of the pains that could probably arise out of issues such as these?
I think on a logical level, yes. Because if you were to look at, as you said, what has come out and what has been declared in numbers, etc. I think if you were to look at it from a valuation perspective and from a logical perspective, you would think yes. But I think now it's sort of gone a little bit beyond that. I think even as far as PSU banks are concerned now, you're seeing more of a, like the mood has gone sour. Really, So I think that, you've seen so many banks. We're talking of Canara Bank down on 3rd or 4th. I think just last Friday we spoke about it in the show where people ask questions, and I said just stay away. And I think that seems to be the general mood, that stay away from this space. And it's not just PSU banks, but it's private banks. I think even the other NBFCs, the entire financial services space, the mood seems to be stay away. And I think there's value there definitely in some of the names, especially in the financial services name. But where PSU banks are concerned, even I would still say stay away.
18% down, I think, in last 4 days for Canara Bank. And this is after the falls that we've seen. I wonder what PNB is doing. We haven't spoken about PNB for the last few days. The last I remember was at 100. They are still about at 95. So there the damage now seems to have come to a bit of a, just ebbed a bit. It's done its bit and it's consolidating at this 95 to 100 mark. But look at Canara Bank the last 4 or 5 sessions. I think 18 to 20% is the kind of cut that we've seen in Canara Bank in the last 5 trading days. 7% down today. 13 million shares traded on a 250 rupee stock. That's not small, let me assure you that. So PSU Bank certainly under a fall of worry. It's 310. We should take from Navneet what stocks come in and out of the band. But wondering the PSU banks have seen massive activity in the FNO side today as well.
That's right. IDBI Bank is still in the FNO ban period, and I don't see it coming out of it, at least for tomorrow's trade. But one stock which is down nearly 8%, one of the top losers when it comes to the FNO securities, and that's JP Associates. If you look at the overall open interest as a percentage of market-wide position limit as of yesterday was nearly about 87, and it looks like it could enter into the FNO ban for tomorrow's trade because there's been a lot of addition that has come in for JP Associates March futures, and as well as the option side has seen a bit of activity. So if it surpasses the 95% level, Neeraj, it could probably be in the FNO ban for tomorrow.
As somebody who's holding the stock would be happy that it does so, because it's been taken to the cleaners the last couple of days, to be honest, has been JP Associates. Look at the intraday fall today. It's very, very sharp and just came off a little bit in the last few minutes of trade. I'll tell you what, some other stocks that have been a part of collateral damage, if you will. Canfin Homes, the last I saw was down about 6.5–7%. Looks like it's still down about 7-odd%. First Source, which had a really interesting move the last few days, is coming off in a hurry as well. And this is in stark contrast to what's happening to the rest of the IT pack, because it's not that the entire mid-cap IT pack is correcting, but this one has come off and come off quite rapidly in the session today. About time, Sharmila, valuations in mid-cap IT started to look a bit punchy, if not frothy. Meaningful, this pullback?
Yes,
it's not across the board, of course.
Yes, I think there are some names which are sort of beating the. You are seeing them do well even in a market like this, which is surprising. But yes, I would broadly think so, because I think there now the concerns have been there for more than a couple of years. A, to do with the business environment, and then post Mr. Trump coming in, the whole visa worry, etc. So I think all that is now getting priced in, and it was there. The valuation saw sort of coming down from the levels that they were at. Now they're at a very different set of valuation, and I think rightfully so. So I think within that space you are now finding names which can do well going ahead, and you are seeing those names do well, whether it is a Persistent, whether it's a Hexaware, whether it's a KPIT. So there will always be some stocks which will get attention even in a bad market.
Ruchit, are you've been tracking this mid-cap IT space very closely. Are you initiating some trades here? I mean, or is it worthwhile to just stay put on trading for the time being? Persistent is marginally in the green, NIT Tech is in the green, but First Source has really come off in the session today.
One needs to be very selective now, because if we see about a month earlier, then it was in momentum with the markets, the entire IT pack was doing well. But now if we just see the large cap IT space, then the large cap IT space now since last 3-4 trading sessions has shown more of a time correction and sideways rather than moving up in a falling market. Within the mid-cap space, yes, we are still positive on Persistent, as I have also recommended, and we are expecting a target around 900 on the higher side. But frankly speaking, we are not that positive on the entire space. Mastech is another name from the mid-cap IT space, where we are seeing good amount of volumes getting built up with a move in the prices. So I think one needs to be very selective in stocks within this mid-cap IT sector, and Persistent and Mastech could be looked upon.
Okay, Ruchit, thanks for that. But just before we get in market close, a very special conversation. Let's go across to Menka Doshi, who has a very special guest with her. Menka, over to you.
Neeraj, thanks very much for that. I'm joined now by the Head of Strategy and Vice President at ArcelorMittal, the Global Head of Strategy, that is, Brian Erhana. As you know, ArcelorMittal is in the headlines these days in India for charting a new India strategy through the acquisition of SR Steel. It is one of 2 bidders for that asset, which is currently going through the insolvency process at the NCLT. And Brian is here to talk to us about ArcelorMittal's India strategy, especially emanating from that acquisition. Brian, thank you very much for speaking to Bloomberg Queen. Before I get on to the SR Steel acquisition and what that means for your India plans, I have to address questions around the failed investment in Uttam Galva and why that didn't go to plan. So I'm going to leave you to answer that question first. What went wrong with the Uttam Galva proposition in 2009 when you decided to enter India through that venture and an investment in that venture? You all sounded very gung-ho.
Yeah, I think with Uttam Galva, I think the story is known. We had a shareholding in that company, but never really participated in the management or the operations of Uttam Galva. Ultimately, the company was run by the Miglani family entirely, and we were more or less a financial investor. So the details of what happened, I think the company got over-leveraged, and the rest is history. But for the details of how it came about, we don't know, because we were not really involved in the management of the company itself.
Wouldn't you say, Brian, that's a little surprising, given that, in your acquisition or investment in Uttam Galva, you ended up with a 29% stake, which by no accounts is meager. And you also had a promotership agreement that you had signed with the promoters, that's the Miglani family at Uttam Galva. So how is it that, you had no role to play or no understanding of why the company's fortunes declined so rapidly?
Well, there were several other priorities in the company at the time that this acquisition was made, so I think our focus was elsewhere. And meanwhile, we did not appoint any board members or people to the management of this company, and it was left to the family to manage. And it's probably better to talk to them about all those details, because they're more familiar with those.
But that doesn't speak very well for your ambitions in India. If you invested up to 29% in a company, spent over reported $500 million to do that, had this ambitious plan to build out a plant in Orissa, which unfortunately didn't go through in terms of government approvals, and claimed that you had no role to play in management. Now, I'm not suggesting that I'm countering that or competing with that argument. All I'm asking is, what does that say about your commitment to India?
Well, our commitment to India is very strong. As you know, there was a downturn in the economy in 2008, and prior to that, we had plans to build a greenfield facility. And since then, we have had an experience with Uttam Galva, which we'll set aside for now. But then we have also attempted through other means to enter India, and now this opportunity has come up. So we look at this very favorably for a few reasons, because I think our compatibility with this particular business is very strong. As we have said repeatedly, we have a clean slate when it comes to our financial management. Our debt is very well managed as a corporation, as ArcelorMittal, as a global company. And then our other credentials for this particular bid, we've talked about in several other interviews. We have the operating experience. We're making, millions of tons of steel all around the world. 85 to 95 million tons, depending on when you want to talk about it. But we're doing this. We've done turnarounds in different parts of the globe. We've done them in Eastern Europe, in Ukraine, in Romania, in Poland, in Kazakhstan. So we have a lot of experience in how to do this that we've accumulated. So that gives us, the compatibility with this particular business that we're trying to take over. Secondly, it's not just the general experience of taking something over and turning it around. With respect to these operations, we have very specific know-how in all the types of operations that they run, some of which are unique. They have a thin slab casting and a continuous hot strip mill behind that. We have those operating in our company. They have this process called the Corex and the Conarc. We have those operating in our company. And of course, then, there are sinter plants and blast furnaces, which are much more common around the globe, and those are operating throughout our company as well. So we have long and deep experience in how to run this kind of a business. And we have a management team that is very deep and can be brought to bear
I'm not disputing the fact that you are the world's largest steel company, and therefore you have experience equivalent to 90 million tons, as you pointed out, which is what your annual production is. I'm just simply asking that if that experience did not succeed in turning around as serious an investment as 30% in Uttam Galva, then why would it sort of make us feel that you're serious about Essar Steel in any fashion? After all, you did spend $500 million in 2009, right after the global financial crisis hit the world, in being able to acquire that. And from everything you said at that point in time, Uttam Galva was to become the vehicle for your ambition in India. I don't want to dwell too much on the past. I'm just trying to use that to understand why, if you didn't succeed in turning that around, you would have a better record in turning Essar Steel around.
Well, with Essar Steel, we're looking, I think the merits of why we should be the winner for the Essar Steel bid is the seriousness of our commitment to Essar Steel is in our bid package. And the resolution professionals and the committee of creditors will be able to view that and understand the depth of commitment that we're making financially and otherwise. So I think I will leave it to them to make that judgment. With respect to Uttam Galva, which we keep returning to, unfortunately, it's a distraction for us at this point in time. It's something in our history that could have been managed better, obviously. Nobody likes to see this outcome. But at this point in time, we are focused on the Essar investment and bring all our credentials to bear there, and would like to put those up against any other competitor to see who is the better suitor for this acquisition.
Fair enough. I have one last question on Uttam Galva, and then we'll talk entirely about Essar Steel. And that is, I think you invested about $500 million to acquire the 29% stake. The last I heard, you exited at ₹1 per share. Can you give me an idea of how much money you lost in that Uttam Galva investment?
Well, I would rather not talk about those details. I think we're focused on moving forward rather than looking backward. And our forward-looking view is towards how to take over and make this Essar asset operate to its full potential, given that we are the partner with the best credentials to make that happen. So hopefully we can focus on looking forward now rather than looking back.
All right, then tell me why you bid for Essar Steel, given that there were 5 different types of steel assets on the block here in India, from Electrosteels to the 2 Bhushan companies to Monet. Is size the only reason? Because all of them are substantially smaller than Essar Steel, and the potential for expansion that Essar Steel holds.
Yes, probably given our ambitions as a steel company in total, wanting a substantial share of whatever market we're in, I think the Essar assets fit better with our strategy overall to be a player in the Indian market that is growing very rapidly. GDP growth rates of 6 or 7% will support strong steel consumption growth in India. So we want an asset that can grow with the economy, and probably the Essar asset was most compatible with that vision and ambition that we have.
Okay, there are a couple of drawbacks.
All right, just few minutes for the markets to close, and Nifty is around 10,160. So today will be the 6th trade session when the markets will be closing in the red. Let's get some closing strategies going from our technical experts. Hadrien, I'll come to you first. Any BTST or STBT strategy that you have?
Yeah, I'll continue to be bearish, and the stock that I'm looking out for is a sell on Aurobindo Pharma. After seeing a good rally, the stock is once again turning around, and I think the current small upswing that we've seen is broken. I think Aurobindo Pharma is all set to move lower towards the 580, 575 mark in the near term. So one can initiate a short sell on Aurobindo Pharma March futures.
Okay, so that's a sell call coming in on Aurobindo March futures. Ruchit, what about you?
I would recommend going short on Just Dial. We have seen that this has been one of the underperformer in this entire corrective move. Now, after a consolidation phase, today again prices have breached its this consolidation low 428. So one can go short at current levels, keeping stop loss above 437 and expect target around 405 in tomorrow's session.
Okay, so 2 sell calls on Aurobindo as well as Just Dial. But Sharmila, I guess you have a fundamental pick on Dabur.
Yes, I mean, it's obviously not a short-term pick, but we have a market where the internal sort of domestic consumption story is slowly getting recognized, and that's coming forward. Plus, I think there are already news reports that monsoon will be normal, which bodes well for the rural economy. Given the fact that Dabur has a very nice presence in the rural segment, as well as their growth there, even in Q3 has been good, as well as the fact that their presence in what is now called like the natural market, whether it's toothpaste or those kind of products, that is also gaining traction. So I think all things put together, good numbers, good valuations, and good prospects going ahead into the year. I think Dabur could be a good buy from a fundamental perspective.
What about ITC? Because a lot of these analysts, they talk how ITC's valuations are cheaper compared to HUL. Would you buy at these levels? Because we've not seen any sort of outperformance from this company in the last 6 months or so.
See, my problem with ITC is that it's a great business, but still most of their revenue as well as their profit comes from the cigarette business, right, which I think globally is a dated business.
Yeah.
So, which means that you have to wait for their food business to become significant. So it is slowly becoming larger, and this whole move towards the agri commodities, etc., is also good for ITC. But if I had to choose between Dabur and ITC, I would go with the Dabur.
Okay. Ruchit, what about ITC, a counter which has managed to hold its gains throughout the session? It's just still sitting with gains of 1%. Do you see any trade there?
Not really, because since last many months, I think, as you earlier said, that we have not seen any kind of outperformance in this stock, even when the markets were going up. So rather, I think this is a broad consolidation phase. Maybe as a conservative bet, this could see some sort of pullback move, and it may move higher about 267, 268. But nothing specific for a trading perspective or any kind of positional buy over here. I think this broader consolidation phase should continue going ahead.
Okay, and in the same space, we've been talking about the liquor stocks. Pull up United Spirits. Remember, that was down nearly 5% in yesterday's session. Today, there was a report from Morgan Stanley where they've cut down the target price, but the stock, as we speak, is almost around the day's high levels at around 30.65. Sharmila, if you track this one, I think it's come off from its highs of 37, 3800. Would you buy at these levels?
So I think 37, 38 was a long time ago.
Yeah.
Since then, it's been sort of doing this 2,700, 3,000, this kind of range. And yes, I think now a lot of concerns are again getting priced in with their debt issues, etc. So yes, I think so. But I would, I mean, in a limited way, I think it's good at this price, but it's not obviously my best recommendation at this point in time.
Okay. That's the view coming in on the liquor space, and well, goes without saying the banking stocks are once again under pressure in today's trade, and you've got stocks like Fortis now that's down nearly 8% in trade. Canfin Homes, we've been highlighting for you, that's down about nearly 6%. Hadrien, would you take a fresh position on the downside on Canfin Homes?
Yeah, definitely. The rally that we've seen is incredible. From the lows of 400, it has rallied back to the 550 levels. And if you see, the larger picture, it has actually exactly hit the rising trend line resistance zone and reversed from there on. So I think one can definitely use this downfall that we've seen. If we see any kind of an up move, we should be in good opportunity to actually initiate short, because the risk reward is clearly in favor of the bears rather than the bulls. So I think if you are a short-term trader, definitely one can initiate short on a Canfin Home Finance.
Okay, that's the view coming in on Canfin Home Finance, but just a few minutes for markets to close, and today is going to be the 6th straight session where markets will be closing in the red. Remember, there's been selling which is coming across the board, so it's not restricted to benchmarks or the broader market indices. We've seen Nifty now coming off nearly 1,000 points from the highs of 11,170 that one saw. On the downside, definitely we were watching for the 200-day moving average, but that's not been breached. So this is how the closing figures are looking like. Nifty is going to close with cuts of nearly 85 points, 10,162. Remember now, the 200-day DMA of 10,130 will be in focus for tomorrow's session. Bank Nifty, this is the one which has been dragging the index lower from the likes of ICICI Bank, State Bank of India, or even if you look at the smaller banks like Canara Bank, those have been reeling under pressure. In fact, today Andhra Bank also saw sharper cuts. From the broader markets, Nifty Mid-Cap Index, so selling pressure seen for the broader markets as the Nifty Mid-Cap Index also saw cuts of about 1.5%. Even the small cap index today will be closing with deep losses. But besides that, we've got the market breadth here. When we opened, it was in favor of the declines, but look at this, how it progressed throughout the session. Towards the end, there was a yawning gap, and this tells you from the broader market perspective, there was more selling which came in because everything was in favor of the declines. These are the closing numbers. So 215 advances to 1379 declines that one saw in today's trade. The volatility which was up, in the last two sessions, today we did see India VIX correcting a bit, but this is the contributors chart which is telling you what dragged the index lower. So let me start off with the losers. Reliance, which off late has been under pressure, dragged the index lower by 16 points. ICICI Bank, SBI, the list is being dominated, A, by heavyweights and B, by the financials that we've been mentioning. But if you sum all of this, it doesn't give you a clear picture because the selling now is across the board. So there were hardly any gainers that you got to see, and definitely the gainers were on the IT side. So HCL was up in trade today. ITC, Maruti, Suzuki, Kotak were a couple of other gainers in today's session. India VIX is the other one I was talking about. So that's closing with cuts of 3.5%. So some respite when it comes to volatility, because in the last two sessions that surged quite significantly. Let's look at the turnover then. How was the participation? Definitely higher than yesterday, because yesterday the F&O turnover was somewhere about 7.7, and today we've seen 8.6 lakh crore of turnover coming from the F&O side. 30,600 for NSE cash. Now this is the figure, I think it's highest in last 5 to 6 sessions, because it was hovering somewhere between 24,000 to 28,000. One concern which the traders have been highlighting, that the turnover from the cash side has been declining. Remember, there was a trend during Feb when the cash turnover was somewhere about between 40,000 to 42,000 crore. In terms of sectoral performances today, the sectoral losers, Nifty PSU Bank, Nifty Pharma and the Nifty Realty, all three of them saw sharper cuts coming about. But it was the FMCG pack actually which was bucking the trend. Remember, it is a defensive space. In times like this, when you see a lot of selling pressure coming in the markets, there is some sort of cushioning which comes on the FMCG side. So Nifty FMCG was the sole sectoral gainer for the day. 26,067 is where it closed. Let's get you some closing thoughts going, and I'm going to go across to Ruchit first. Ruchit, how should one rather approach the index tomorrow? Everyone's eyeing the 200-day moving average on the downside. Let's say if we get a mild gap up opening, should that be used to create short positions in the index?
Certainly, certainly the trend for the market continues to remain negative. Yes, just as you said, the whole world's eye on the 200-day moving averages. So we may see some sort of pullback move from this average, but one should not forget that the trend is on the negative side. So rather than playing for that pullback move, any kind of up move, use that as a shorting opportunity on the higher side. So I won't recommend to buy anything because of this support, but rather use any kind of pullback moves from this support as a shorting opportunity.
Okay, Hadrien, what about you? What would your approach be?
Yeah, I would concur with gentlemen just summed up pretty well on what the strategy should be. So sell on rally should continue to be the strategy. No doubt that the 200-day moving average would play an important role for some kind of settling of prices that we have earlier spoken. But looking at the constituents, the way they are behaving, you see the SDFC twins, you see the pharma heavyweights, you see L&T, all these stocks are actually showing weakness, and if the leaders are going to lead on the downside as well, so the trend is clearly showing that we are going lower. So I think rather than trying to initiate longs, one should definitely wait for this pullback for shorting afresh.
Okay, so that's a consensus call coming on the index. Use every sort of pullback to short the index. Gentlemen, both of you, thanks a lot for joining us today and taking us through your technical views on the markets. But Sharmila, before I let you go, are you using these dips to make any sort of bottom fishing trade?
Absolutely. I think, this is time to sort of start buying. But precisely as you said, I think, you need to stagger your buying, because as you know, we were talking earlier also, I don't think any of these concerns are going away in a hurry. So you need to keep your list ready. Like I've been looking at India Cements, because I think cement is a sector that you can look at. I've been looking at some financials. I think LIC Housing Finance has also corrected quite a bit. It's below 500 rupees. I think it's worth looking at. I think the metal names will also bounce back at some point in time. So I think, you know, there are a whole group of stocks. Dabur we spoke of. So I think there are a whole group of stocks, but you just need to sort of average your buying down now.
All right, Sharmila, thanks a lot for joining us today and taking us through your views. But with that, it's a wrap on this edition of Countdown. Thanks a lot for watching the show. Don't go anywhere. Coming up next is the Mutual One Show with Neeraj Shah.
Life's so lovely, live life happily. Oh, plan your life the way you want it to be.
LIC's new endowment plan offers a combination of protection and savings.
Invest to save and get insurance. Bring home eternal happiness.
Sir, please believe me, I am in this business for the last 12 years. Okay, I'll wait for your call. Thank you so much.
They still don't know you after all these years?
क्या करें? पहचान ही नहीं है.
Simple solution है. List on the stock exchange. With listing comes recognition. Investors get interested in you. And funding happens.
Come on, yaar. I'm not big enough to list. Chal, let's leave.
There's a stock exchange exclusively for your kind of company. NSE Merge. It's the right platform for your business.
Really?
Yeah.
My kind of company?
Exactly. Get listed, get recognized. अरे भाई, हीरे की असली परख जौहरी को ही तो होती है. चल.
NSE Merge. साथ हमारा, सफलता आपकी. The SME Growth Platform from India's largest stock exchange.
On 26 November 1949, the Constitution of India was adopted, recognizing liberty, equality, and fraternity as the principles of life, which cannot be separated from each other. The government of Karnataka has imbibed the ethos of the Constitution by developing programs and policies aimed at creating a socially, economically, and politically just society. Karnataka's flagship programs such as Maitri, Annabhagya, and Arivu have created an equal opportunity platform for all, irrespective of their gender.